Hello everyone. Today we'll discuss what mutual fund is all about and what are the advantages and disadvantages of investing in mutual fund. So there are broadly two types of investments which one can look for. One is an active portfolio management and the other is a passive portfolio management. Now in the active portfolio management, an investor can think of investing on itself. So he can start investing in equity, debt, gold, commodities by doing his own research and can do the investment. However, it is very difficult for a small investor to be expertise in everything, to have a knowledge of everything, and therefore it is always advisable to give your money to those people who are expert in that. Therefore, what is mutual fund is? It's a pool of money which is collected from investors, and they are according they're invested according to certain investment objectives. So each scheme when it is launched, it has some investment objective. That is, it defines where the money will be invested. And we will see later on that the SEBI has made certain rules and regulation to ensure that the investment are being done in the objective which has been slated in the scheme. Therefore, the money in the fund which is coming is the money of investors. It belongs to everyone. So money doesn't belong to the person who is mobilizing the money. The money belongs to the group of investors. Therefore, the ownership of fund is joint or mutual, and the fund belongs to investor. So what happens to this? So mutual fund business, what they do is they collect the money from the investor and they invest according to the predefined objective which they have already informed to the investor. So how does it all work? So it starts that investors pool their money, give to the fund manager. Fund manager has has set the objective for which the money will be invested. The money will be invested in predefined securities as per the objective of the scheme. Why they are investing in these securities? But obvious, these securities will generate some returns. Now logically, the returns have been generated by the money invested by these investors, and therefore these returns are passed back to the investors. Quite obvious, you will ask what this fund manager will get. Fund manager will charge certain amount of fees because of rendering this service. So this is how the pool of flow of money takes place. So let me again reiterate, it's the investors, the fund manager mobilize money from the investors. The investors give their money to the fund manager. Fund manager has already disclosed that in what type of what is the objective of the investment, where will they be investing it, that has already been predefined. They will make a portfolio of investment and will invest in those securities. Those securities are expected to generate higher returns, and those returns are thereafter passed back to the investors. And quite obvious, the fund manager or the mutual fund company will charge certain amount of fees from the money which has been given by the investors. So this is in crux how the mutual fund, any scheme of mutual fund will work. Now let's look at some questions will arise here. How does a mutual fund work? So we have gone through a crude way of how does it work. However, it need to be seen how does it supervise, how does it all work. And for that, what has the structure of mutual fund here which has been followed uh, is it's a three-tier structure. It's a three-tier structure, and we are talking in terms of Indian context how it all works. So first of all, there's a sponsor. So a company or institution which starts up, who wants to initiate the mutual fund business, they come and sponsor. It's like a promoter in the company. So it's the same thing in the mutual fund business as a sponsor who brings the initial capital. Now the entire money which the company is managing is the money of people. A lot of investors are there who have given their money to the company. Now who has to see? Somebody has to see whether this money has been used or utilized in a most judicious manner. Therefore, what does the sponsor does first? They have to create a trust, and the trust has to ensure that the company or the fund managers are investing this money in proper compliance and all rules and regulations are followed. So the first thing which the sponsor has to do is to create a trust. Now there are detailed guidelines that who can be member of trust, but obvious all members cannot come from sponsor. There have to be members from outside the sponsors also. We will discuss this at a later stage when we'll discuss the structure of the trust. So the first thing, the sponsors bring the initial capital, they create the trust, and thereafter they create a company which is called asset management company. So this is the first level is a sponsor, the second level is a trust, and the third level is the asset management company or AMC. Now this AMC becomes the face of the mutual fund business. So all investors, distributors, all advisors, they interact with the AMC. The sponsors and trust take the back seat. It's the AMC which becomes the face of the mutual fund business. And the fund managers, all the employees are work under the AMC, and they have to report to the trust about the entire working. The trust supervise the working of AMC and ensures that all the rules and regulation and the transparency laid down by the regulator are followed. Then there are some other bodies also in the mutual fund business. Other is a custodian. Now, but obvious, the AMCs will have a fund manager. They will buy certain securities. They will sell some securities to ensure that the securities are actually bought, they are actually delivered, they are actually purchased. Do you have another party which is called custodian, which has to ensure that if the securities are purchased, they are actually taken into the custody of the AMC, and this is independent of the AMC so as to maintain a transparency in the working. So this becomes the broad structure of the mutual fund business. All in India are regulated by a SEBI, which is Securities Exchange and Board of India. So how does it work? It's the people who invest money. They actually, how do they invest money? They buy units, and the number of units they are buying, that amount of money they are investing. So these people in the mutual fund business are called as the investors in the mutual fund business are called as unit holders. So unit holders put their money in form of their savings and money to the AMC. What does AMC do? It invests, it generates returns, and then they pass back to the unit holder. All this work under the supervision of a trust who has to ensure that the highest degree of transparency is maintained in the entire business. Because actually, trust plays a very critical role because they are actually on behalf of the investor and supervising the business of AMC. Because otherwise, there will be always a trust deficit between the unit holders and the AMC, and the unit holder will always have a doubt whether the money they have invested in the AMC has actually gone for investment in the predefined investment objective. So trust has to ensure on behalf of unit holder that this actually happens. Now, what can suppose, let's take an example in Indian context. So here we have taken a very prominent mutual fund company, which is SBI Mutual Fund. So the sponsors of SBI Mutual Fund is the State Bank of India. They create a trust, which is SBI Mutual Fund Trustee Company Private Limited. SBI Fund Management Private Limited becomes the AMC, which is a face of the company. Custodians are, there are HDFC Bank, there's SBI SG Global Securities, and Bank of Nova Scotia, which is SBI Gold ETF, the product which they have launched. One more party which plays a very important role, which is called RTA, Registrar and Transfer Agent. Now, what is Registrar and Transfer Agent? Actually, it is nothing. All the clerical and back office work of the AMC, either the AMC can take and do it on themselves. Otherwise, what generally just for cost saving, most of the AMCs in India have outsourced this to some other company, because most of the things like KYC norm, updating PAN card, updating address, sending statements, very routine clerical work. So broadly in India, there are two companies which are working. One is a CAMS and the other was a Carvi. So here we are talking about the registrar and transfer agent, which is a CAMS, which is a Computer Age Management Services Private Limited. Then, so this is an example. Now the question comes, what is the advantage of, why should one invest in mutual fund? So there are many advantages of mutual fund, but one of the biggest advantage which we are taking about, as I mentioned, today somebody wants to invest in equity market. Now there are near about 5,000 companies listed in stock exchanges. Now which company to buy, when to sell, there are a lot of knowledge is spreading around around everywhere, but it's difficult for a small investor or retail investor to read about everything, to find which company is good, and therefore it is better. And then what actually happens, you miss the bus. You don't invest in equity market thinking you don't have enough knowledge, and which is true also, because investing in share market, investing in equity market requires good amount of knowledge. Similarly, investing in bond market, investing in gold market, investing in commodities, all these require a very specialized knowledge and specialized skills, and it is difficult for investors to have all these things. So what should we do? Should they not invest? In that case, the mutual fund plays a very critical role, because they are professional managers and experts, and they can manage the funds much better than a small investor can do it. So that's advantage number one. Second, they are expertise people, so they know how, when to buy, when to sell, and they can review and rebalance the portfolio as and when the market condition changes. I'm not saying they are not the gods, so it is not that that they will do everything good. It also does not mean that they will always give you a positive return. But premium face it is expected that these are professional people, and therefore they are expected to generate a higher returns, and then vis-a-vis if I manage my investment on my own. So on the other hand, if you look about, one can call about what are the another thing which can look about the advantages of mutual fund is that generally we call that investor in mutual when you once you are investing, you must always diversify your portfolio. There should always be a high degree of diversification should be there. Now some investor like investing like 1,000 rupees, somebody want to invest 2,000 rupees per month, 500 rupees per month. It's very difficult for a small investor, 500 rupees, 1,000 rupees, to diversify the portfolio. But look from the mutual fund angle. If they keep on getting 500,000, 2,000, 10,000 rupees from a group of investors, they have the corpus which can be easily diversified. And therefore, even if an investor is investing 100 rupees, 500 rupees, his money gets diversified. So, thirdly, if you want to, one can also think, okay, fine enough, why should I invest in mutual fund? I can also look at their portfolio where these people are investing, and I can buy those stocks. Yes, you can do so, but then buying those stocks, keeping a track on it, and then there's a high degree of cost will be involved. You have to pay, might pay a very high degree of brokerage fees. Whereas these people, when we are working in the large AUM, the economies of scale comes into picture, and therefore their cost may be lower vis-a-vis you yourself managing the portfolio, or investing 50,000 rupees, lakh rupees, just by buying the stocks and copying the stock which companies are doing it. However, there are some criticism of mutual fund. The criticism of mutual fund is, yes, they are just informing you that where this money will be invested. So for example, we'll discuss in the next session about different types of scheme. So one of the most popular scheme is a large cap fund. Now the only thing which they are telling you that they will invest in large cap fund. Which large cap company, when will they buy, when will they sell? Now they will not ask your permission. So this is not a customized as per your choice. You will get to know when where the money is invested, but is it are they taking permission from you? No, they are not taking permission. So those people who have a very high degree of expertise, uh, and they think that they can manage their investment on their own. They don't require professional investment managers, but obvious for them, a mutual fund may not be a very good idea, right? So in this small session, I've tried to give you a brief overview about mutual fund. We will continue in next part also. So